All right, welcome back to another live stream. There's some videos that I want to go over today, so we're going to go ahead and jump right into it. If you guys watch live, leave a comment. If you're here for the first time, consider subscribing. But yeah, let's go ahead and jump into some videos that I want to chat about. So first off, I want to hear what Dave Lee is saying. So we're going to go ahead and react to this video from Dave Lee, and then we'll go from there. And I can talk about my thoughts and strategies and stuff like that. So let me go ahead. Tab. Okay, perfect. All right, let's jump into it. We're going to go like that probably. Okay. Make sure everything's good. All right.
Pro market voice. You know him, Tom Lee, co-founder, head of research at Fundstrat. Tom, it's only one day. We get it. We're still the bull market we heard earlier, still intact. But your take on today's move and what may lie ahead.
Well, Brian, it may be overdue to an extent. We've had a nice rise of 36% since the April lows, and I believe today's decline is the biggest in more than 6 months. But it's good to see the VIX spike. The VIX spiked at 1.29% today. That's the 51st largest ever spike in the VIX. So we're a top 1% move in sort of what I'd say the market seeking safety. And so I think it's a good flush that's happening today. I would like to say the market is concerned, but as your other guests have said, especially Rick, I mean, unless there is a real structural change, this pullback is a buying opportunity.
Wow, 51st biggest move for the VIX. So why is it good that the VIX is responding? What does that signal?
It shows you that investors are seeking protection. And as the VIX is a measure of expected volatility of the largest 100 stocks. And so a spike in the VIX is really a market saying, okay, I need to get out of everything, but I can't sell everything. So let me hedge it by buying volatility. And that is usually a sign of an interim low. I mean, I don't want to say I think markets are bottoming today, but we know that the forward returns are pretty good 1 month and even 1 week later. So I would say if someone says, are we higher a week from today? I'm going to say the odds are actually really good. We might even be 60 points higher.
Wow. But that's happened. That's what's been happening, as we talked about earlier in the show, Tom, that we've seen these buy the dip buyers come into the market. We get a day like today, the dip buyers come in, we're higher a week later. Do you expect that to happen again, absent some further escalation with China?
Yeah, I mean, anything's possible, Brian. And I think that the markets lived through this February to April, and it was a day by day panic, and maybe there's echoes of trauma people are thinking about, and we do know that this. These are important issues. So I wouldn't want to be glib in saying, hey, this is nothing, because the market is making a big move. But to me, if I said, okay, what are the reasons stocks have been attractive for the past 12 months? It's been about the innovation coming from AI, and it's the innovation as Wall Street looks onto the blockchain, and now it's the Fed that's beginning an easing cycle. These three things have structural tailwinds that aren't disrupted because of potential even rare earth dispute with China.
Do you want to see the market not end on its lows? We're not on our lows right now.
Well, it's Friday, and it's a long weekend. So as you know, a lot of people like to shut down their computers. So I wouldn't be surprised if we might see the market close on its lows, but to me, I don't think it's a signal. As you know, markets rarely bottom on Fridays anyway, so maybe Monday is the flush, but then, that's the buying opportunity.
All right, that was a good clip. We'll go ahead and recap that in just a second. But I want to go ahead and also kind of explain exactly what happened, why the markets bottomed the way that they did. And we're going to go ahead and listen to this clip from Fox Business to listen to exactly what happened. And I'll talk about what I went ahead and did when the markets bottomed as well, and why I hope Tom Lee is right. And let's go ahead and take a look at this clip, and then we'll chat from there. Oh, whoops.
Superbly for a long time. And while she remains constructive, she does say that the setup for continued near side upside is much more difficult than it's been. So let's bring in now Partners Group Managing Director, Chief Investment Strategist for Private Wealth, Anastasia Amoroso. And let's just get started with these headlines, right? So we start the day off, and China is going after rare earth yesterday. Today they're going after chips companies, NVIDIA, Qualcomm. President Trump says, okay, you know what, we may not meet, we may have to go maximum tariffs, sets up this pre-fall in the market, this pullback in the market.
That's right. Well, the operative word may, it doesn't necessarily mean that we're not going to get a deal, but the markets are reacting to any headline, to your point, Charles. You know, the market was set up for perfection here. The expectations are incredibly elevated across the board. They're elevated about earnings, they're elevated about the economy, they're elevated about the labor market, and of course, there's optimism about the AI trade really continuing the momentum near term. And I have a degree of skepticism around all three of those things.
Is your skepticism long-term now? I mean, do you think the AI trade is over, for instance? Or, I mean, sure, you see the bottoming out. The labor market, what are you skeptical of, that it's weakening and that the Fed should be cutting, or that maybe it's weakening more than we know?
That's the point, is the labor market is clearly weakening, and we don't get the official payrolls data, but we got the alternative data suggesting it's weakening, and yet everybody assumes that it's not going to spill over to anything else, that the labor market is going to continue to be resilient. That's a question mark for me. As far as the AI trade goes, you know, clearly we're building a whole lot of capacity, but the question is for what? Will the killer apps actually surface? Is OpenAI the killer app? But I think we need something else. So that's what I'm kind of skeptical about near term, because there's a lot of capacity. Where's the payoff?
Is there a chance?
I actually 100% agree with her. There is so much money going into compute and into AI. But for what? What are we getting right now? And right now, OpenAI is leading the charge with ChatGPT. It's leading with Sora. But we need another company that's not just a chatbot. Like, we need, as much as I love Grok, we don't need another copycat of ChatGPT. We need something that actually is going to another, like she said, another killer app. What that is, I don't know. If I knew, I'd be where she is. I'm just kidding. I don't know. But what she is saying is, in my opinion, absolutely correct. We need another killer app. Let's keep listening.
And I've been asking this question, you know, we all live through the jobless recovery kind of thing, right? That when that phrase is popular, could we have a paradigm shift in our economy where AI does just enough that we actually do have less jobs, fewer jobs, but greater prosperity? Can that exist?
I mean, that's in a way what the market has been setting up for, and that's what it's been experiencing, because the labor market has been weakening for 3 months, and yet the market, the S&P, has been roaring. So I do think, Charles, that, for example, people worry about inflation, but if you have the combination of AI on top of everything else that's going on in the economy, we might actually put a cap on inflation. And look, near term, I'm skeptical about the AI momentum. Longer term, it is clearly a shortcut to productivity. And I think the opportunity is immense across sectors. So yes, I do think that it could be a more tempered labor market, and yet productivity that picks up.
So let's talk about one thing that you think could be a tailwind, right? Rate cuts. I mean, you say it helps in a lot of ways, right? Improves cash flow, can maybe offset tariffs, improve real estate. We see maybe mortgages coming down, and short-term equity valuations. How many cuts do you see coming?
I see another 2. And I will say near term, cautious, longer term into 2026, optimistic, but that is contingent on the 2 more rate cuts, because if we do have 75 basis points all in, it can improve the cash flows, because companies are clearly absorbing some of the tariff costs, so they need an offset. It can certainly improve real estate valuations, for example, or private equity valuations, or valuations in general. So that would certainly be supportive as well. And most importantly, it could improve the labor market, because what do companies do when they're uncertain or when they're absorbing costs somewhere else? They're holding off on hiring. Maybe they're even laying off workers. So if the Fed could cushion that by getting some of that cash flow back to them from lower interest rates, that would help.
All right. So just real quick we didn't get the jobs report, right? What if it had come in negative? I mean, we're playing a guessing game. What if it feels like maybe the Fed is so far behind, the next cut has to be 50 basis points once we get the data?
Yeah, well, we forget the data. And, look, whether you get 25 basis points at the end of this month or whether in another, 25 basis points in December, I think it's close enough for the Fed to say we're going to assume this measured approach. But I do think they need to act, Charles, because we got the ADP numbers and they were negative last month.
Right.
They were revised to slightly negative the month before. And so, whether we act 2 back-to-back or 50 basis points, we'll take it either way.
Let's talk about sectors, though. You are still seeing opportunities in the markets, and this is just in the publicly traded markets: financials, healthcare, industrials, data center, and power generators. Let's go to industrials, because you had sort of a notes, because we know, like home builders, for instance, have been bringing industrials down. This was the #1 performer for a while. It's slipping a little bit, so you have to be selective, right?
You do. It is a cyclical sector, but at the same time, it is, is really underpinned by a lot of the secular trends that are happening. If you think about what this administration is trying to do is cause a wave of onshoring, and I think it's likely to be successful. So it's all about localization and duplicity of supply chains, and to do that, you do need quite a bit of those industrial activities.
All right, let's talk private markets versus public markets. The value proposition for you is pretty clear. Cheaper valuations, greater opportunity, faster earnings growth, better profit margins. Is there anything that we should be worried about? Some negative headlines have come out about, private credit. Some of these things, some things have blown up here and there. We see stocks like Blue Owl pulling back. And by the same token, retail investors have clamored for access to this for a long time.
Right, and they're getting access to that. No, I wouldn't necessarily say, Charles, I'm worried about any of those things. I do think the rate cuts actually go a long way to support private markets, but I'll take it a step further and say I'm worried near term about the public market volatility. And one of the reasons why this is even a greater point to emphasize right now is because private markets do give you that diversification. For example, infrastructure has about a 0.24 correlation to global 60-40. Private credit gives you that yield boost relative to other things in fixed income, and private equity is not going to whipsaw like public markets are going to whipsaw on each headline.
All right. And just sort of follow what the rich folks are doing. If you can. I mean, get access to it.
Well,
this is what you're trying to do, right? I mean, partly what you're trying to do.
That's right. Increasingly you can. And we've actually had a private equity.
So what they're saying right here is that one of the advantages to private markets is because you have to be either an accredited investor or you have to follow certain stipulations in private market for different regulation offerings, that because they're more of an illiquid investment, when you get headlines today that you have a pullback of 500 bips or 2% on the indices, that people will sell out. And that's what you can't do in a private market. Is generally they're illiquid. And so on a day like today, like you don't see because it's a private market, you don't see that 2% pullback. Then you don't have as much of that whipsaw as they were saying on the private market side. So I think that was a valuable point.
Evergreen solution for private clients for 16 years. So it is increasingly accessible.
Great stuff. Oh, I'm so
perfect. Okay, let's talk about what is going on and exactly my plan and strategy with this. So, all right, we just watched Tom Lee and Charles Payne kind of talk about what happened in the markets Friday afternoon. As you know, Trump and China are not getting along. Trump is wanting to increase the tariffs, I believe, up to 100% on some products going into Friday afternoon. That led to a large stock market sell-off towards the end of Friday afternoon. Let's go ahead and take a look. If you just take a look at the S&P 500, you saw that it bled out, okay? You saw that it bled out 2.69%, pretty ugly heading into a longer banking weekend. So you have Saturday, Sunday, and then the banks are closed Monday. And so the stock market will still be open Monday. And so it's going to be really interesting to see if the sell-off continues. Tom Lee thinks that because people turn their computers off Friday afternoon, that the selling may not be over quite yet. He said that there could be more pain ahead, which would be really interesting. So here, I'll tell you what I did, and then I'll tell you kind of my longer term plan. So I have two plans here. I apologize. You weren't able to see my screen there. But as you can see here, 2.69% on the S&P 500. No fun. Nobody likes a red day. But when you're off all-time highs, the all-time high was 619. So we're not too far off the all-time high. It's a little hiccup, which is good. It created a buying opportunity for a lot of folks. I'll tell you what I went ahead and did. And we'll see if Donald Trump totally just gave us an opportunity, or if it's not going to pan out too well. So right around here, I bought an NVIDIA call for one. Let me pull it up really quick. I forgot what I bought my NVIDIA call for. Let me see. Get my iPad really quick. Let's see what I bought my NVIDIA call for. Let's see. Whoops. All right, let's see what my NVIDIA call is for. Let's see. Where did it go? I lost my NVIDIA call. Let me look. Let me see. Let's see. So let me just pop this up on screen so you can see it. Okay. So here is my Here's my cute little NVIDIA call. I just bought one contract. It expires next Friday at 192.50. So I'm really hoping that this is just a little hiccup and that we can keep going. But what Tom Lee is saying is that potentially there could be more pain in the markets on Monday. And I mean, obviously that wouldn't be the greatest thing for the call, but we're looking for a bounce back in stocks on hopefully Tuesday at the latest. But my call option is kind of banking on that. So I bought the call option around here and it continued to bleed out. NVIDIA did, which is a bummer. So the high is 195, and I was betting that we could get right back to this 192.5 area on that first dip, which was right here. But as you can tell, we sank a little lower. So I'm really hoping that what Tom Lee is saying, that maybe we have some selling pressure Monday, but he does expect by the end of next week to be higher. Not that Tom Lee is always right, but I do think that you do create a strong dip buying opportunity as long as Donald Trump doesn't do anything crazy and impose 150% tariff. Maybe he pulls back and the market rallies on it. Whatever it may be. That's my short-term strategy. Long-term, what Charles Payne and this gal were talking about, I'm a huge fan of, because what she's saying is that let's see. So she's expecting 2 more rate cuts for the end of the year, which I agree, but I don't think that's going to dramatically bring down the 10-year Treasury, which is what our mortgages are tied to, and which is what I think will unlock a lot of credit for a lot of folks. Sorry, not credit, which I just will unlock a lot of money for people that are tied up in mortgages. I think some in the last 2 years, 60% of mortgages are above a 6% rate. My mortgage is currently at a 7.1% rate. And right now with market at all-time highs, I'm thinking, does it make a lot of sense to be buying these 1 or 2% dips? Or do I start aggressively paying down my mortgage faster because it's a higher debt, right? It's a 7%. So it's like, hey, I think I'm going to start putting more money towards my 7% debt and start trying to chip away at that instead of taking that money and then just having it sitting waiting. I'm going to be buying down the debt on my house to be able to, when there's an opportunity, to be able to buy the dip or just start taking out some of that bigger debt. So that's my short-term plan. My long-term plan, obviously, I didn't sell any of my current positions. Hopefully this NVIDIA call does well, but this is kind of what Tom Lee and Charles Payne were talking about Friday afternoon as the market got into a situation that was kind of, I thought we were just going to dip and bounce back, but instead we kind of got this continued bleed out. We got the continued bleed out, which wasn't quite what I was expecting. But hey, you know what? You do what you can do, and that's the fun part about being in the market, right? So that's it for this clip. So thank you guys for watching. If you enjoyed, subscribe. Okay. All right, let's go ahead. That is that. I also want to watch this Sam Altman interview, and if it's really boring, then we'll just skip through it. But I want to watch this Sam Altman interview. Okay, let's go ahead and dive into the Sam Altman interview. Okay, let's All right, so Sam Altman had an interview Friday afternoon. Let's go ahead and take a look into it and see what he's saying and see if we can figure out any more of their game plan with Sora, the social media, what his game plan is, and see if he talks about this circular money at all. So let's go ahead and jump right into it. And yeah, let me know if you guys have any questions. I'm actually going to speed this up just slightly. Okay.
The GPT-4 equivalent of video models, and we will do that.
Over time, this can almost become like a little mini like alternate.
Congrats on all the progress. I've been enjoying Sora a ton. Personally, I've been enjoying making them. I had a ton of fun making the collab post yesterday. And I was wondering,
prompting, your cameo feature. John made it so that he always appears as a bodybuilder if anybody's cameoing him. So you guys got to experience.
And it led to some chaotic results. Do you have favorite Sora posts that you've been coming back to, or that have stuck out to you as particularly creative uses?
I mean, definitely all of the ones of like me stealing GPUs or doing other crazy things to get GPUs have been funny. In the last few days, there at least in my feed, there have these like very beautiful, sort of fantastic scenes that are just not things that could have ever existed without something like Sora, or wouldn't have been easy to make. And watching people build those and watching sort of the trends flow through that has been pretty awesome.
What about you, Bill? Any favorite uses of Sora so far?
Oh man, Mark Cuban came on the platform a few days ago, and there've been some hilarious Shark Tank memes. Those are probably my favorite. Pitching some Sora features.
Yes.
Yeah.
Also, leveraging the prompting function to always include an ad for cost plus drugs, I thought was especially hilarious, considering he's been one of the most vocal opponents of advertising in AI. He is leveraging the feature to the max.
Yeah, I think there are going to be all of these weird new dynamics that we see emerge that just weren't possible in previous kinds of video, and this is like a fun period because it's all going to be so different every few days. Man, I'm watching this Polymarket ticker go by, and it's so tempting to like say things to.
Yeah. To be clear, don't worry about the ticker. I don't think we're including. I don't think any of those markets are being featured in the ticker. But yeah, again, this is the new world we're in.
Yeah, you can move the market live on TBPN.
But today, people, I'm sure, will be happy or disappointed. We're here to talk about Sora. Of course.
Yes.
So none of the other topics.
But I also want to know about ads. Why no ads in Sora on day one? I feel like you've laid out a really great, mental model for how you think about ads on Stratechery, on the Andreessen Horowitz podcast. I'm bought in. Is it a technical thing? Do you need scale? Do you need to think about it more? Why no ads on day one?
This is like a 10-day-old product, right? Like, it's hard to get anything to work at all. And we don't assume success. We got to like go hard earn success, and then we can think about monetization for it. But this is like, it's gone great so far. It's still very early, and there's still a lot of work to build something a lot of people are going to love first.
What about surprising capabilities of the model? You mentioned that you've seen some fantastical scenes. I'm interested to know about specific breakthroughs that you've noticed that Sora 2, the model, is particularly good at. I noticed one about reflections being great. Obviously, people love cameos, but what has surprised you in terms of just like technically the model can do something now that it couldn't do before?
This model is a huge leap forward in terms of physics IQ. So pretty much all past video generation models really struggled with prompts that involve like backflips, gymnastics routines, etc.
Yeah, right.
And this is really the only model that exists today which can reliably handle these kinds of really complicated dynamics. One of the big features that people have really loved on the app so far is the steerability of the model. So if you give it like a really simple text prompt that's maybe even only a few words, this model is really good about kind of telling a coherent story with like a beginning, middle, and end, and doing this like automatically in a way that doesn't require like a lot of direct steering from the user. If you want to like go into a ton of detail about exactly how your prompt should be laid out and how the story should unfold, it supports that too. So it can kind of meet you wherever you're at in the creative process. But really, this model is just like so hyper steerable, and it's like just vastly higher physics IQ, just makes it able to do things that were like not possible a few months ago.
Is that all within the model, or is there some sort of like reasoning step where you're hydrating or unpacking my prompt and writing a bigger prompt or breaking down the problem in some way? Can you share anything about that?
Yeah, it's a good question. So the intelligence for these text conditional video models kind of lies both in the core model itself, like Sora, and some amount of it also comes in through the text prompt. So however the user decides to kickstart a prompt, you can have like a language model under the hood add some details in. But for example, when it comes to things like again like doing these backflips or any kind of physical interactions, how refraction is modeled, when you're pouring water into a glass, all of these details have to be captured by the core video model itself. So that's intelligence, which is really innate to Sora. And certainly you can supplement it with intelligence from a language model as well, but it's not necessarily a prerequisite to get kind of amazing results out of these things.
Are there any areas on the physics where you think that the model falls down and you want to improve? I mean, we went through the era of like 6 fingers. It seems like reflections in water are solved, but someone was saying something about doors being hard, or I haven't noticed that one personally, but a lot of stuff's great. But what have you noticed is like the next version is going to be even better at?
This is still very early. I think Bill said that I appreciate it. This is like the GPT 3.5 moment for video.
I agree.
And if you went back to use the actual GPT 3.5, you'd be like, okay, signs of great promise, can do the occasional impressive thing, but it was really not until GPT 4 where these text models started providing real value for people. And we know how to go make the GPT-4 equivalent of video models, and we will do that. And then a lot of these things that are currently annoying, like doors, or once in a while something goes through something else it's not supposed to. In the same way that the world, loved to complain for a brief period of time about where 3.5 fell down and it's never going to be useful, it's never going to do this, it's never going to do that, and then we were able to just keep making it better and better and better and better. The model physics IQ is certainly the best I've ever seen, but it is nowhere near as good as it will be in the future versions. And I hope we'll see a similar thing to what happened with the GPT text models, which is people will always demand more and better, and they will always find new and better things to use it for. And the world will just make ever more amazing videos.
And to
How
Sam's
quickly?
point,
Oh, sorry.
we're
How
so
quickly-
early on the
go
tech
for it.
curve for video here.
Yeah.
Like GPT-1 really was Sora 1 for this modality. And the progress we've made kind of in the last 18 months into this 3.5 moment, right, is really compressed compared to how long it took to go from GPT-1 to 3.5 in the language domain. So we're really expecting progress to continue to be meteoric here in the near future.
How quickly do you expect the Cameo feature to be cloned? That feels like a equally important part of the, the model's made a leap, but the product is, and the experience and the experience of creating these assets is wildly innovative. We saw stories get cloned. We saw algo video short form feeds get cloned. I expect many other platforms to be looking at this functionality and realizing that this might be the future. You guys certainly believe that it could be important. So how quickly do you think?
We're actually totally okay with a world where we do the product innovation and everybody else copies, and I don't think it works for them as well as they think it does. Like a lot of people have tried copying ChatGPT. You can go look at some of our competitors' apps, and they even copy the mistakes. They even copy the design decisions we really wish we hadn't made. And maybe it's worked well for them. I guess I kind of hope it has, but it's been fine for us. Yeah. I think like the key to this is not any one innovation, but it's repeatedly putting them out again and again and being first to come up with them and put them into a cohesive offering. And that's what we want to be good at. And if other people want to clone the stuff that works, we also sometimes clone stuff that works. That's fine. But mostly we want to be able to drive the innovation. And I think Bill and his team have done an incredible job of figuring out how people actually want to use these video models, what the models need to do. Really, they've approached this as a full stack problem, from how do you train the video model to how do you make this enjoyable for users. But cameos are one out of many ideas they have from here on the journey to like the product that we hope to eventually build. And so if people take some inspiration from us and copy us along the way, I'm sure they will. It's fine.
How do you think about the popular claim that we want AI detection? I want AI content flagged. Is that a stated preference that's not a revealed preference? Because personally, I don't want bad AI content, but I don't want bad human-made content either. I want great both, and I'm fine when someone comes up with something genius and they instantiate it with a video model. How do you think about it?
I think that is the real thing, is you don't want slop, you want great content.
Yep.
Different people, one man's slop is another man's treasure for sure. Yes. But what you care about is like good, original, thoughtful, new, helpful, whatever content. And whether that is generated entirely by a human or entirely by AI, or what I expect will mostly happen in the future, which is tool-assisted, human-driven generation, I don't think you care that much if the content is great. There's a lot of
something that I'm thinking about is the ability to monetize. So he talked about not wanting copycats. Well, he doesn't care about copycats, but I think that Meta copying Sora, if Meta were able to do this, they'd be able to monetize it so much better than OpenAI would. I could be wrong on that, but that's just kind of like, that's Meta's strength. And so although OpenAI is leading the charge, Meta, I think, could do monetization better just because they already have the ad platform in place. I could be wrong though.
Stuff that is technically written or drawn or filmed by a human, but is completely derivative and much less original than what an AI has generated. And I think that will be what people really care about long term. You just want great content. Now, I also do want some human connection with it. When I read a great book, first thing I want to do is read about the author that wrote it and what life experience went into that. I don't think that'll go away. But if they're using an AI as a tool to help them make the writing better, sign me up. That sounds great. Similarly, I would rather watch a video about someone I know than some random AI-generated character, which is part of why I think this was cool to offer. One design decision the team made I thought was really great, and I was actually pushing them in a different direction earlier on, and then I decided they were totally right, and I thanked them and dropped it, was the fact that the feed is AI only and not a mix of AI plus some uploaded videos. I think is a subtle but extremely important design decision in how people are relating to this.
Yeah, it was a very weird experience for me. I was thinking about the collab post that I was making announcing this interview, and my initial thing was like, well, I'm gonna have to think of a script, or I'm gonna have to think of what I say, or I should record a piece of this and then I'll use it. And it was like, no, I just type the prompt in and then I get the front-facing video. Is remarkable.
What kind of indicators are you guys looking at as Sora can transition from what it was the second it launched, which was a creative tool, into something that's more of a consumption platform, traditional social media platform? Talk about kind of what you guys are pushing forward to. Because obviously you're seeding the network with the tool, but it's certainly much harder to turn it into something that people are spending hours a day in purely consuming content and not creating content.
We really wanted to design this from the ground up to be centered around creation. And a lot of the metrics that we've been focused on optimizing here are really aligned with making sure as many people as possible are actually getting their hands on the Sora 2 model itself and able to create content with their friends and for the rest of the world. One metric that we're really proud of with this launch so far is that 70% of our users are actually creating content, even to this day, a week and a half after launch. And that's vastly higher than on any other social media platform. Yes. And I think it really speaks to just how fun creation can be with the right tool set, right? If you look at any of these kind of legacy platforms, there's just so much friction from getting off the feed and into some creative flow state, right? You have to put the phone down, you have to go get a camcorder, start recording yourself, find your friends, do a dance, etc. It's just a lot of work, right? Yep. On Sora, you can just pick up your phone, find any video you like in the feed, remix it, cameo any of your friends. And I think one insight that was not obvious to us at first, but we've kind of clearly seen as an emergent behavior of this product, is just like there's all these people out there who would not necessarily want to be like, influencers or something, or have like a big social media presence. But the fact that like all of their friends can just access their Cameo, right, put them in all these crazy situations, actually like kind of gets them into the playing field in a way that felt really high friction before. And so
I just feel like that's so dangerous. I feel like this whole thing is so dangerous. People that want to be private don't want to be on social media. I think this is just such a dangerous product in terms of people's privacy.
We're closing in on close to like 2 million weekly active users now. We're really excited that such a huge percentage of that user base to this day is like still creating with Sora, and we're going to continue pushing in that direction and making sure people have even more powerful tools in the future.
Yeah, so 70% of Sora users are creating content. The typical benchmark that people kind of quote randomly is like 1% creation, 99% consumption, something like that. And that certainly feels like my experience on Instagram. I post a photo every once in a while, but most of the time I'm just kind of scrolling. And I'm wondering if you think that 1% will be much higher on Sora in terms of actual time in the app, time prompting versus time scrolling. If you have any data, that'd be super interesting. But then also, does that make it more of like a competitor to video games than traditional social media because it's such a lean forward experience versus just lay back? What do you think?
Yeah, it's a great question. We still need to study this more exactly, how creation versus consumption habits kind of change over time for folks on the platform. It's still pretty early days. I do agree with your point, though, that I think over time, this is going to feel much more immersive in a way that like video games kind of do. Like you have more agency when you're actually using the platform, not just kind of like mindlessly scrolling a feed like hours a day. And like one interpretation of this product, which I think is kind of interesting, especially from the research perspective, right, is Cameos in some ways like the simplest way where you can kind of like inject yourself into the model, right? So it's a very low bandwidth communication channel right now. You're only getting like a few seconds of video footage of like any given individual like into the app. But like over time, right, you can imagine like these models know more and more about your life. They really like deeply understand your friends, how you want to like show up in the world. And like over time, this can almost become like a little mini like alternate reality, right? So like you're not just generating like videos of yourself with your friends, like you actually just have like digital copies of yourself running in the model on the Sora platform, interacting with other people with agency. And so I think over time, we're really going to see this platform evolve into something that feels kind of familiar today, into something that really leans into like the full intelligence of Sora 2 in the future, and like really leverages all the world simulation capabilities that we're working on internally.
Yeah, so, I would add to that if you think of this like spectrum of the kind of entertainment you can have in front of the computer, at one end you have like watch a 2.5-hour movie and you hit play and then you lean back and you don't do anything at all. And then at the other end you have like a very intense video game and you're like sweating and your heart's racing and it's like super super active. AI is going to push things to be more in between there. So you'll have maybe you're still watching that movie, but now you can like say something a few times throughout the course of it and it changes what happens as the movie plays out. Or with Sora, you're seeing this amazing new phenomenon where most users are creating in a world where traditionally 1% of them did. And so you're like watching a video feed, but you're doing a little bit more. And it, at least for me, really changes how fun the whole thing is and how I feel about it. Then maybe you'll do what Bill said and you'll be way more actively participating in the Sora feed. And I think you're just going to see that continuum blur a lot more.
Did you see Bandersnatch by any chance, Sam? Have you seen this Netflix? It's like a Netflix choose your own adventure, and it was a really cool idea, but ultimately it never really took off and became like something they do again and again and again. And I'm wondering if it was because it was like not customizable enough, or people just want to just sit back and see a director's vision. I don't know. Anyway,
I never heard of that, but it sounds cool.
Yeah.
How do you think, question for Sam, how do you think about allocating compute to Sora versus the rest of the business? I imagine Bill is constantly in your ear every other hour, but how are you thinking about it?
My real answer is I've entirely changed my focus of how I spend my days to just go get more compute rather than have to make the compute allocation decisions.
Yeah.
I still do have to make some short-term compute allocation decisions, but I hope we're heading to a world where I make the compute allocation decisions. My real answer is I've entirely changed my focus of how I spend my days to just go get more compute rather than have to make the compute allocation decisions.
Yeah.
I still do have to make some short-term compute allocation decisions, but I hope we're heading to a world where I am instead telling people you got to find a way to use more compute, and we're going to be very aggressive here.
It feels like you're doing a great job of like bringing things within your control, within the supply chain. What is outside of your control at this point?
I mean, most of it.
But I feel like you have great partners all up and down the stack, multiple partners in different parts of the chain. Like when I think about scaling up Sora, I feel like it's crazy to bet against you. Like you're gonna get the chips. You're not gonna be
GPU. You go try to buy like 10 gigawatts an hour for delivery next year. It's not so easy.
That's funny.
How are the conversations going with Hollywood?
Oh yeah.
Oh, actually.
Yeah, you take it.
Yeah, I was going to say, we've been chatting actually with a few, very notable folks in Hollywood over the last week. I think people's first reaction to this is like very understandably going to involve a lot of trepidation and like anxiety. When we've gotten to just sit in a room with these folks though, and really explain what we're building, I've actually been pretty struck by like how excited folks in Hollywood are about this. We were chatting with one actor recently who mentioned that, on Twitter, like a year ago, saw like a deepfake of her generated with one of these like open source models, which really had like a lot of nasty content created. And when we really we walked her through kind of all of our safety mitigations, right? How we're making sure that we have this like very well-defined model spec, which dictates the behavior that we allow on this platform, and how we are really leaning into like full control of likeness, right? More so than any other platform. Like you have to come in through the Cameo process. You can't just like upload an image of yourself and just like generate a video of it like any person. You have to come in through Cameo. And it became clear that we're really setting the right standard here in terms of making sure people are in full control of their likeness in Hollywood. I think that's where like a lot of this anxiety comes from, right? It's this feeling that some random person can just kind of take videos or images of you and do whatever they want with them and create all of this like terrible content that's like outside of your purview. But we've really been like designing Sora from the ground up to put users in full control of their likeness end to end. From the moment you sign into the app to needing Cameo permissions to like access any of your friends' generations. So, I think we need to engage more with Hollywood, and we're going to continue to do that. But once we really explain the story of Sora, they're very receptive to it.
Do you think there's a
To
world
add something to that, the team asked me before launch if they could put my cameo in their open access, and I of course thought about it for a second and said absolutely yes. I had all these Hollywood celebrities then messaging me on the first day being like, "You're absolutely crazy. This is insane. This is like the dumbest thing I've ever seen." And then by about the third day, they were like, that was really smart. You got like a lot of free publicity. Maybe we need to be doing that." And I think you're now seeing actual celebrities say, "Okay, I'm going to do this," and I expect a lot more of them will. Similar thing on other kinds of characters in IP. I can totally imagine a world where our problem in a year or 6 months or maybe even less is not that people don't want their cameos or their characters appearing, but they think we are not fairly having their characters or cameo appearing often enough.
Yeah.
This may turn out to be a really big thing for fan connection. Now, it may be that kind of the previous generation of celebrities don't want to do this and the influencer celebrities all do. I don't know how that's going to go, but I bet this will be like a pretty deep kind of new connection.
Yeah, it seems like it's been good for DiCaprio in the memes. Like he's not directly monetizing those when you show the champagne meme or him pointing at the TV, but it builds his aura in some way.
A friend of ours posted something yesterday. This is Jeremy Gaffani. He said the reason we're so upset about slop is because it's obvious we're all going to love consuming it in 2 to 3 years. It's not going to be slop for long. Do you agree, Sam?
I mean, some of it will be slop to some people and some of it won't. I remember there was a real reaction like this in the early GPT days where people were like, "I can't believe anyone reads this. It's like total crap. It's full of hallucinations. It's like, it's not useful to anyone." And then it became more useful to some people, but they said, "I can't believe anybody ever thinks this thing writes a beautiful sentence. That's insane." And then with GPT-5, you have authors saying like, "Wow, this is a useful tool. It sometimes writes a beautiful sentence."
Yeah.
And I kind of think it'll follow a similar trajectory.
What do you think about the fact that people feel, at least, I don't know if they actually can, but it feels like you can still clock GPT-5 writing, it's not this, it's that, the M dash. Like, will we still see these artifacts in 3 years in Sora 5 that people are like, "Oh, if you know, you can tell, but most people can't"?
Yeah, it's like, what's the M dash of video? Because
yeah.
I don't think it's like 6 fingers.
No,
right?
no, definitely not. That's the typo, which doesn't happen anymore.
Yeah, I think right now the M dash is like this slightly wired speech pattern in Sora where it likes to say a lot of words very quickly. These generations definitely have like a style to them. I think analogously to GPT, we really want to give users a lot of control over exactly how their videos show up right on the platform. Like if you really want kind of like a very soothing experience, right? Not a lot of shot changes going on. We want to give users the ability to generate that. We're going to continue to give more optionality to people. So, there'll be some default kind of behaviors and quirks of Sora for sure, but we definitely want all power users to be able to be in full control.
Random question. Where did the name Sora come from?
Yeah, this is a fun one. So the original Sora came out in February 2024, the OG blog post.
Yeah.
We did not have a name for it, I think up to 2 days before we revealed the model to the world. We just could not agree on the team what it should be.
Did you at least have a code word or something?
We didn't. We just called it Video Gen.
Okay.
And so at some ungodly hour, I just started pumping a bunch of crazy ideas into ChatGPT, and then we basically ran out of English words, so then we switched to Japanese words.
Wow.
And then Sora came out. I was like, wow, that sounds really nice. It means sky, linked with imagination, all the possibilities of creation. And so then we just last minute shipped Sora. So yeah, it was kind of a mad dash.
Okay, speaking of Japanese stuff, Sam, you said you were looking for an Acura NSX a while back. It's kind of this throwback car. It's not a Waymo. What do you think the piece of content or format will be that remains loved in an age where everyone's taking the Waymo of video, the Sora video generation? What do you think is
Well, first of all, I got that NSX and it lived up to all of the childhood hype. I mean, just
Nice.
incredible. That car is so fantastic.
Great.
And I don't know. I kind of think there's going to be a lot of stuff like that for people that generated or not, where you want the real thing. You want the thing that you have the kind of childhood connection to. Someone like a kid today is not going to want the NSX, but whatever a cool car like that is, they will want. And at some point, the fact that they can have a crazy VR experience, they'll still want the real thing and the connection to it and everything they have. So I think there will be a huge amount of that. In fact, I think the future looks like much more of that kind of stuff, not much less.
How quickly do you want to create an economy on Sora? It feels like there would be a number of ways that you could create incentives for creators to create things, for IP holders, for individuals to just be passively monetizing their likeness.
Bill, what do you think for timing on that?
I mean, this is a top priority for the team. There's clearly such an incredible value proposition for celebrities, for rights holders across the board here. We think Cameo is a great entry point for this, right? You can imagine right now we have cameos for people. Maybe you have cameos for your character or your brand or something. And so we're actively working on the team right now, coming up with the right monetization model here to get this rolled out. But it's really important to us, right, that our creators on the platform are rewarded and that there are clear, financial incentives for the incredible work that they're already doing. Yeah. So this is top of mind for us, and we'll have updates here over the coming weeks. This is something we're actively working on.
I think it's super important and awesome. I will say I would like to know how many hours of sleep Bill has averaged for the last few weeks, but I bet it's not enough. So we got a lot of stuff. The team's got a lot of stuff they have to do in a short period of time, and it's going to take a little while. Okay,
let me put one more thing on your plate, Sam. Earlier, years ago, you built Looped, location-based product. Have you thought about how AI and location-based content fits together? On most of these social apps, you can tag a location. That wouldn't even make sense in the current Sora app, but what does the AI Maps product look like?
I haven't thought about AI and location that much, but I've thought about how AI can really change the social experience for people. Mm-hmm. We don't have a for sure answer yet, but we have a lot of interesting threads to pull on. Mm-hmm. And I have thought back to my days running that startup there more. my instinct is it is possible to make a very interesting new kind of social experience, connecting you to people, helping you find people that is intermediated by AI in an interesting way. But we have a lot of exploration to do there.
What advice are you giving to startup founders these days? I remember in the GPT 3.5, GPT 4 days, it was like, don't build a company that assumes model stagnation. How do you think about in the age of Sora?
That's been really great advice.
It really has. It's played out. It played out exactly like that. There's a bunch of great companies that aren't built that way, and they've done great. But if you were just, I have a special prompt that tunes up GPT-4, yeah, bad times. But how are you thinking about it now in the context of video and Sora specifically? You obviously do have an API. You have Dev Day. There's people that will build on top of this. Is it a different shape of the problem?
Totally. The reaction to the API has been nuts positive. Like it's at least the fastest ramping revenue I've ever seen for one of our new models in the API. I mean, maybe there was something faster than I'm not remembering, but the demand there has been just incredible, and people are doing awesome stuff with it. Bill and I have not had a chance for a one-on-one since lunch because it's been so crazy. We're doing one later. We're doing one later today. But one of the things I was going to say just to him was that given how much excitement there is to build on this stuff, that we do something we don't usually do and put out our intended roadmap of the things we're going to prioritize. Because I can imagine really cool new startups that simply were not possible that will be possible at each of these new things will ship.
So I had a question when you guys released the Sora 2 via API, which was that if Sora has the potential to be a Instagram or YouTube scale business, why release part of your edge for the entire world that they can integrate into other creative tools and then use the model to generate content that doesn't have a watermark, that's not in your feed, that you're not able to get that feedback loop on that you guys do with the Sora app?
For ChatGPT, we also put out a great model in the API, and people can theoretically compete with us on ChatGPT, and some try to, but we are willing. We're never going to build every cool use of the technology. We want the world to get all that stuff. We're delighted to also get paid on people using our API, but we just want AI to flourish out in the world. We're not going to build every great use of what you can do with video models either. We'll build one, and I think it's pretty awesome, but people have a lot of other ideas of business and products to go build, and we'd like to enable those.
Okay, last question. Back to cars. What's wrong with the Porsche 911?
Yeah, you said earlier the timeline was in turmoil. You said if you were worth, somebody said,
if you have 5 million net worth,
you buy 911. You said no. You agreed with PG. What did you mean by that?
I mean, maybe it was like a tasteless joke. It was kind of like late at night. I was, whatever. But I have an unfortunate proclivity for expensive cars. Yes. And the response was like, would you ever spend $250K on a car? And I took that literally.
That's amazing.
Hit the size gong for taking it literally. No time for 250K cars. Not this.
But that was not my best tweet.
Yeah, no,
we enjoyed
it now.
We all enjoyed it.
I enjoy it now that I have the context. Congratulations on all the progress to both of you. Thank you so much for taking the time to stop by the show.
Really appreciate the update.
All right, that was an interesting interview for me to listen to. I don't think there's a ton for me to add. It just kind of taught me more about where their mind is at with Sora. That's pretty low view interview, 3,000 views. Not many people have. There wasn't a ton there. It was the most interesting thing was there wasn't really that. I was waiting for something about compute, or they talked about it very little. But yeah, let's go ahead. I want to. Let's see what my next option is here. Okay. I want to go ahead and figure out where what's her head? Shelby Church's Airbnb failed. So we're gonna go ahead and watch Shelby Church's Airbnb and see why it failed. And let's see if we can figure out if the Airbnb bubble is here.
It's been live on Airbnb for almost 4, if you can believe that.
But a lot has changed about the Airbnb landscape in this time, and it's making a pretty different amount than it did a few years ago.
So I want to share today how things have changed and if Airbnb is more or less worth doing today. If you've been following the journey, you know that at first it lost a bit of money, then it started to make money, but I always thought that over time it would become easier to earn more.
I had a hypothesis the whole time that over time, nightly rents would go up with inflation. Everything gets more expensive over time. Our expenses would hopefully stay about the same, maybe raise a little bit, but just the way that your rent and food and airfare, everything has gone up in price, I thought that, nightly rates would also go up in price.
I figured since the main expense being the mortgage is locked in and the nightly rates would slowly go up.
I'm gonna take notes and see if we can put together let me see. I'm going to put notes together so that we can try to track her expenses and see if we can figure out her Airbnb and her cap rates and stuff like that. Okay. So her okay. So we're going to do this. Okay. Mortgage is at 3,100. Okay, great.
It would be become more profitable over time. And today we can see whether or not that started to happen.
But before we get into it, I want to thank Belkin for sponsoring this video because I actually added one your watch to have more fast charger, size can plot. They're very cute about Airbnb.
Quickly go over.
And now let's get into the state of Airbnb today.
So if you're new to my Airbnb, let's quickly go over the numbers.
As a lot of you already know, but if you don't, I'll sum it up pretty quick. The house was purchased for $750,000. We had to
Okay, let's put that. So purchase price of $750. Okay.
put like between 150 to 200,000 into renovations. Between the amount we put down and the amount that we put into renovating, it was probably around $400,000. Looking back, could you do things for cheaper? Yeah, I'm sure that you could, but also it was at a time where everyone was renovating, so even the prices of renovations were a bit inflated. So it is a significant amount that we had to put down in cash. And to be honest, back then, I wasn't thinking about this in terms of an investment. I was not comparing it to what I would get had I put that money in the stock market instead. It was really more of, we want a house we can use in Palm Springs and hopefully we can make some money off of it too. So even from the start, I wasn't quite looking at it from the cash on cash return standpoint.
So the first year, it actually made quite a lot in revenue, but the expenses were so high that we did not make a profit. Then the next year, we actually did make a profit of about $7,000, though I'm sure this will all just eventually go to maintenance. But the reason we profited was not because the rents were higher, it was because the expenses were lower. We charged the proper amount for pool heat, and we didn't have any crazy major repairs like we did the previous year. So let's talk about that nightly rent and what it's looking like. Has it gotten higher?
Yeah, the first year of owning a property like that, after you buy into a bunch of renovations will be probably more expensive, and that's why their expenses were the lower the second year, because you kind of get all the crap, like you kind of like battle test it. Like when you do the renovations, you can test it and you can see what works and what doesn't. And then when you have guests go through, it's like, oh wow, I totally forgot that X, Y, and Z didn't work 100%. Now we have to fix that. But then the second year, it's like it's already been battle tested by a bunch of different guests.
No, actually, they've gone down, and that was kind of the average for this time of year. So you can see that in the past years, by this time, sort of end of September, we would have made around $55,000 so far. That was kind of the average for this time of year. So far this year, from January to September, it's actually only made $38,000. We can see that the winter and early spring is still very strong. I mean, you just look at that and it looks like the house is doing great. It's making what, $8,000, $9,000, then $7,000 a month. And then really an extreme drop off in May, when the previous years, we still made a pretty good amount, probably about $3,000 a month, May and June. But this May, it was $1,000, $600 in June, $1,600 in July, just really not enough to cover the expenses. And even though these winter months sound good, 8,000, 9,000, 7,000, they actually, when you look at it, still weren't quite as much as the previous years. I mean, it really varies, but in 2023, there was a month that made 14,000. So my hypothesis that nightly rents would be a little bit higher was not correct so far. Although it is still pretty early, I wouldn't really expect within 4 years the nightly rates to double or anything like that, but I certainly didn't expect them to go down.
And actually, when I looked into it, the rate of inflation for travel lodging is pretty low. It's usually about 2% a year. Meanwhile, the rate of inflation for everything else has been a lot higher in recent years. Housing has been closer to 4% per year. Even things like eggs have been closer to 5% per year. But even that 2% inflation rate for travel lodging, we haven't even seen that. And the thing is, the nightly rates that we got when we first launched were actually pretty unusual.
So during COVID and really all of 2022, everyone was seeing inflated nightly rents that they wouldn't have seen the previous years. The thing is, when we put the house live in 2022, it was skewed from what I call the COVID effect. Airbnbs were doing amazing during COVID, partially because of work from home. People were taking these workcations. They would come and stay at this house for 5 days, just like randomly. Now with people returning to office, it's not really possible for as many people to do that.
So there's overall less demand now than there was in 2022.
Our average price back then was $700 a night. Whereas now, if you're listing at $700 a night, you're not really gonna get that. Our average now during the peak season, I would say, is closer to $600, and during the off season would be $400. So nightly rents are significantly lower. What we can really learn from this is Airbnb nightly rents do not track with the rest of inflation that we're seeing, because it's a luxury, not a necessity. In fact, there's actually an opposite effect. As everything else has inflated and gotten more expensive, people of course have less money to spend on luxuries like a vacation, clothing. If you look at the stats, people are not spending quite as much on travel this year, myself included. I even like a month ago told myself no more trips the rest of the year because that is when I spend the most money.
And my property manager confirmed that this is across the board. It's not just our Airbnb, but all the ones that are a similar price to ours are seeing a lot less bookings this year. But the ultra high-end Airbnbs are actually doing really well, interestingly.
The thing is, these really high-end Airbnbs have a very different clientele that aren't as concerned about the job market. It's people with a lot more money. They're not worried about inflation. They have a lot of assets usually. In fact, inflation probably benefits them more than anything. The middle tier Airbnbs like mine are booked by people who are much more affected by this kind of thing. There was a 2025 survey that found that Americans are spending on average 25% less on everything from dining out to vacations. It's not because the vacations have gotten more expensive. It's because of higher cost of living, macroeconomic concerns, and overall inflation. The job market hasn't been super optimistic either, which certainly doesn't help. And the overall sentiment about it is pretty pessimistic, which also kind of reinforces and makes people more afraid to spend their money on things they don't need because of fears of if they lose their job, it could be a lot harder to get a different one. Whereas in 2022, people are getting bonuses to job hop somewhere else. It's just a very different economic environment. And all of this stuff affects Airbnb more than it does a necessity like a long-term rental. So this year has been actually slower for Airbnb earnings, and I think it is because of this macroeconomic environment more than anything else. It's nothing to do with the Airbnb itself. Like, it has really good reviews. People enjoy staying here.
It's more about people having tighter budgets in general.
The interesting thing is this house actually has the potential to cash flow about $20,000 to $25,000 a year if I rented it out for 6 months of the summer.
What I've realized is it brings in the bulk of the money from November to May. It'll usually make around $50,000. And the rest of the year, people are willing to rent for about $4,500 a month.
You know, this past year I looked into doing it and there were some people who were interested, but I decided not to because we did get a couple random summer bookings, so we didn't want to cancel on those people. And two, really the bigger reason is I'm just so afraid of getting a squatter. I actually would rather lose a little bit money or break even than end up trying to cash flow but getting a squatter. I just don't think the risk is worth the reward. But there is a strategy in Palm Springs where you can actually make some money. You just rent it out short term during the high season and then you get a 6-month renter. Believe it or not, a lot of people actually were interested and it would have cash flowed, but I don't want to risk it getting a squatter.
There's something about it being fully furnished and only being a 6-month rental that makes me feel like it would be more likely to get a squatter for some reason, but I could be wrong here.
So is Airbnb worth it in 2025? Well, it really depends on your location and your intentions. Here in Palm Springs, if you're trying to make money, if you're trying to cash flow and get the best return on investment, no, it is not worth it. You're definitely better off keeping your money in stocks or something like that. This is not financial advice, but just historically, as I showed in that other video about stocks versus real estate 5 years later, it would have done better in stocks. However, not everyone is looking for return on investment. For me, this house is still worth it because I use it a lot. I come here all the time, I bring friends and family here, and I essentially get to use it for free. Over time, the house still appreciates in value, and over the last 5 years, we've paid down about $50,000, so that's $50,000 more in equity in the house, just from basically renters paying the monthly mortgage. If your goal is to make the highest return on investment, then no, a Palm Springs Airbnb is not it. But if your goal is to have a second house where most or all of the expenses are covered and you have like a free place to vacation, then it can be worth it. Which, side note, if that's your goal, if you want a second house that you can still Airbnb out so you can cover most or all of the expenses, it is still possible to do that in certain neighborhoods in Palm Springs. Some of them have reached the cap and you can't get a rental permit in that neighborhood anymore, but there are actually still quite a few where you can get a rental permit. I am a real estate agent here in Palm Springs and in LA, so if that is something you're interested in and you want someone to guide you that knows this market, knows what you can rent it out for, just knows contractors and property managers in this area, I'll put my form down below because I'd be happy to guide you through the whole thing. I know this place like the back of my hand. I just like for people to know that realistically, it's probably not going to cash flow a ton of money. If you want a second house and you want to be able to rent it out to cover some of the costs, it is still possible to find that. What I would really urge is don't buy an Airbnb in a place that you never want to visit purely to make money, because then if it doesn't actually do that, you're gonna be pretty annoyed. So while I still think it's worth it for me because myself and my sister use this house a lot, I would not think it's worth it if this was a place that I didn't enjoy visiting. The interesting thing too is there are still Airbnbs out there that do cash flow and do make good money. I have researched this so much. I've interviewed hosts, I've traveled to all these different Airbnbs, and the key is unique stays in remote areas that don't have restrictions. So think things like A-frames, tree houses, geodesic domes, in areas where the city doesn't cap the amount of rentals you can do. Those ones are actually doing really well. But if you're looking at just a normal house, turning a normal house into an Airbnb, the days of that are long over.
So the truth is, Airbnb is probably less worth it now more than ever, and it really only makes sense if it's a second house and you want to use Airbnb as a way to cover some or all of the expenses.
There are a lot of restrictions here. You can't rent your house out as much as you possibly want. It is restricted to 36 different groups, which really limits the amount that you can make on Airbnb.
So it's possible that a normal house on Airbnb in a city without these restrictions could do well, but here it's really only worth it if you're getting the personal enjoyment out of it too.
All right, that is gonna be it for this video. I hope that you enjoyed and learned something. Comment down below what you think of this whole.
All right, let's see if we can figure out what is going on with her Airbnb. So I was taking notes on the spreadsheet here. So her mortgage is $3,100 a month. We don't know if what she's making is net or not, or if it's net revenue or if it's gross revenue. So her mortgage is $3,100 a month. She bought it for $750,000. She's in for $400,000. So let's put $750,000. We'll put $400,000 here, and then let's take January through September was $38K this past year. 38. Let's just do January, February, March, April, May, June, July, August, September, 9. So let's do 38 divided by 9. Whoops. Let me do 38 divided by 9. 38 divided by 9. That's $4,200 a month. So $4,200 a month. Okay. So Palm Springs interest rates 2022. So it says that on average it was a 5.53%. Let's say she got a 5.53% interest rate, 5.53%. And she's, where is that? She's bringing in $4,200 a month. Okay, let's see. But she only put like $200 down on. Yeah, there's a lot of variables that we don't know. Let's see. Okay, her mortgage is $3,100. She's barely covering her mortgage. Palm Springs. I don't have enough details on this house, so it is what it is. But that's, yeah. I think that's. I can't. I don't want to spend the time to figure out because basically here's what I was figuring out. We don't know. We're gonna guess her interest rate is 5.53%. That's fine. If she's afraid of a squatter for 6 months, she needs to have higher credit standards, verifications, employment verification. Like she could. This is just an anxiety, not necessarily an anxiety that you can't really ration with unless you like put higher limits in place. Because if you have somebody with an 800 credit score, the likelihood of them squatting is lower. Obviously, there's always a risk, but that's just a risk that comes with renting out real estate. So biggest takeaway, if she's afraid of a 6-month rental, and if that is a popular thing and she does have applications, she needs to raise her standards. Okay. And then if it's really an anxiety, then you can find a ton of eviction attorneys that are really cheap, like to go through the whole process. Like it's thousands of dollars, not tens or hundreds of thousands of dollars. It's not that bad, depending on the state you live. But get somebody, like call someone, be like, hey, like this is what I want to do. What do you guys recommend? And you can interview them and you can find 2 or 3 that you really like. The hardest part about these is the amount of time it takes. So it's not necessarily the cost, because you can have people that do it fairly cheap, but it's just the time. So like if that's your fear, then that's a potential. She can essentially use it for free, and that tracks. But we don't know if this number is net or gross, because if it's gross, she's barely break even. And Palm Springs real estate, I mean, we can look at the Redfin data center. Palm Springs. Let's see how much Palm Springs has appreciated. The average selling price. Let's see if we can find it. Median sales price. Okay, the last 5 years. I mean, since 22, she bought it in 22. It hasn't appreciated too much just based off of median sales price. But again, we don't know how much. We don't know exactly. So it hasn't appreciated too much, but she's gotten $50K in principal pay down, which is nice. Let's go back and see if I can answer any more questions. Okay, Palm Springs hasn't. I don't think it's appreciated too much in the last 5 years, but that's okay. Yeah, she's not cash flowing. She's barely break even. I think that's good advice. She's basically saying, don't buy an Airbnb as an investment. Just do it as like a life hack that you can stay somewhere when you want to. And she's saying you can't just turn into any Airbnb into a normal house into an Airbnb, that you need to actually have to want to visit there and use it as a second house. So I thought that was actually a pretty good anecdote. Okay. So her travel lodging, her rents haven't increased, whereas with the tenant long-term, you can increase rents. So that's a pro. Typically for single family, you can typically increase rents without too big of an issue, at least a little bit. And I mean, if she Palm Springs average rent. For 50 house. Let's see. Yeah, I mean, she could be pulling in 4 to 6K. So I mean, it's essentially the same. So she could be rough ballpark 4 to 6K and no BS, right? Like once you have a monthly tenant in there in a single family, it's pretty relaxed. But we don't know if this $4,200 a month that she's making from Airbnb, did she already take out her Airbnb fees, her property management fees, her expenses? Like, I don't know I hope she did, because if not, then she's losing money on a monthly basis on this, but she didn't do it for an investment. So like that's whatever. Fine. And I also think that with the Airbnb boom, you have seen hotel prices become competitive, and people overall are just not wanting to spend time in Airbnb when they can get questionable quality. Whereas if I go to a Marriott, I know exactly what to expect. So you have started to see hotel prices compete, and you've also seen the consumer kind of change. So she said that the high end has continued to maintain its rent, like the high end Airbnb rentals. And we don't know how much a property manager is charging her, because she's not managing it. And the mid tier, she said, is just super volatile. Macro environment, she said that people are just wanting to spend less. And you've seen that with her rents. They have not increased. But with a single family house, I mean, even if they rented it out for $4,000 a month, and they increased rents 5% a year, and she's had it for 5 years, I mean, she could be getting close to $5,000 a month now with her principal pay down and no BS. But then the downside of that is she wouldn't be able to live there. So I think that she should really, if her biggest fear of the 6-month rentals is really squatters, she needs to higher standards, and to reduce anxiety, talk to eviction offices and talk about the process, as well as costs, time, etc. Because I mean, when you have a squatter, there's so many things you can do. It's like, hey, you start just with the process of a 3-day pay or quit. And then you start with, okay, can we get on the same, like, there's a whole thing you can do, cash for keys, and then you can kind of get into the eviction attorney, which the evictions are not pleasant. They take a while, but there's just so many things that you can do. And if she's not wanting to deal with it, then that's her prerogative. And so overall, I think that it's a very interesting move to do a 6-month lease. And if her biggest anxiety is squatters, then increase your standards, increase credit, increase background checks, increase whatever you need to do legally to ensure that you're getting a quality tenant for 6 months. Do it. If you can't get a quality tenant, then don't. And then to further reduce anxiety, talk to an eviction office and kind of have them on standby. So that's kind of my suggestion. Just basically analyzing this video is that she could be cash flowing maybe a little bit more, but she wouldn't be able to live there for 6 months if she did the 6-month rental. So I hope you guys enjoy this. Let me know if you guys enjoy the property breakdowns and what you guys think. But I think she's running a good business, and I think she's not, the important thing is she's not doing it for a business, right? She's making a ton of money off of her YouTube videos doing it. So it's smart there. I mean, if you factor in the amount of revenue and sponsorships she's been able to make because she has an Airbnb, blows it out of the water. Absolutely worth it. And she's not factoring that in at all. So factoring in her situation, she's probably doing the right thing. But if I were to do this, and if I were in her shoes and I wasn't making YouTube videos about an Airbnb, that is something that I would consider. So let me know if you guys enjoy these kind of real estate Airbnb breakdowns. And if you enjoyed it, consider subscribing. Cool. All right. We have been live for 1 hour. I'm tired. So hopefully you guys enjoyed it. If you enjoyed, consider subscribing. Like always, see you next time. Thanks for watching.